To your next lesson on support and resistance. Now, although this is known as a very basic technique, it's very common amongst traders when it comes to analyzing a market, and it becomes especially useful when we are in a trending market. Now, people will explain this in different ways, but we have our specific way at TTF of explaining this, so it's very easy for newbies to understand. I'll go through that in a little bit more detail in a little while. Now, I wanted to begin with actually defining what support and resistance is. So as the name suggests, support is the price actually supporting a certain level, and in this instance on Euro Aussie we can see the support being highlighted over here. Now all this means is that the price begins to fall within this region, but the price is actually being supported by this level from it falling any lower, and therefore you can see every time price begins to fall within this region, you can see it immediately bounce to the upside. Okay, we can see that again here, and it begins to bounce to the upside. Okay, now resistance on the other hand is basically flip reversed. So if we were to draw a line on here to show a basic level of resistance, we can see every time the price begins to reach this level, it begins to reject to the downside. So it's resisting the price from going higher. Now, of course, the price won't remain within these ranges forever, okay? So it's going to have to break the resistance level or the support level. Now, in this instance, the support has been broken. And in this instance, the support now becomes the resistance. And I'm going to show you this in a little bit more detail now. Okay, so the easiest way that we teach support and resistance at TTF to absolute newbies is by imagining yourself being in an apartment block, okay? So if we can imagine this is now the ground floor, we've got the first floor over here, and then we've got the second floor above that, and so on, okay? Now, this will make a little bit more sense now. What I want to do is kind of illustrate this in a theoretical format. So if we look at this being a apartment block, so this is the ground floor, this is the first floor, this is the second, and this is the third, and so on. Now let me just highlight this here as being the ground floor. Okay, so this is now the ground floor, and this is the first floor, and similarly this is now the second floor, and the top one becomes the third floor. Right, so imagine yourself sitting on this ground floor. Okay, so this is obviously the floor and this is the ceiling. Okay, again, once you move up to the first floor, this is now going to be your floor and this is going to be your ceiling. So if we relate this back to trading, okay, when it comes to support and resistance, the floor is your support and the ceiling is your resistance. So always remember that. That is the easiest way to kind of remember support and resistance when you are analyzing a market. Now, let's show you this in a little bit more detail. So again, theoretically, imagine the market now beginning to fall. It reaches the floor. Now remember, the floor is known as the support, as the price is going to support this level from falling any lower. Now from the floor, it begins to rise again towards the ceiling. Okay, and the ceiling is going to reject the price going any higher, which is known as resistance, and then begins to bounce from the floor again. Now again, when we're teaching newbies, the easiest way to kind of remember this is bouncing a ball, okay, from the top, and it bounces and it hits the floor. What's it going to do off the floor? Okay, it's going to bounce to the upside. And again, if you bounce the ball towards the ceiling is going to resist it from going any higher, and then it bounces from the ceiling back down towards the floor. Okay, so that's the easiest way to kind of remember support and resistance. However, within trading, what's normally going to happen is if you keep bashing the ceiling over and over again, that ceiling is going to break. Okay, so when that ceiling breaks, the price actually breaks through the ceiling, known as resistance in trading. Okay, now you're on the first floor. So this ground floor temporarily becomes irrelevant. So we can now get rid of the floor of the ground floor because now we are on the first floor. So our floor is now here, and our ceiling is now here. So in trading terms, this has now become your support, and this will now become your potentially now become your new resistance level. So again, if you begin to bounce the ball from this level, what will normally happen is your ball will bounce towards the ceiling, and the ceiling will reject that price from going any higher, and it will bounce back down towards the floor. And because we are now in a trending market, again, what's eventually going to happen is that the price is going to break through the second floor and come up to the third floor. Okay, so similarly, as I mentioned before, the support now becomes your resistance, and so we can now get rid of the first floor, and we are now on the ceiling, the floor of the second floor, and the ceiling of this floor over here. Okay, so I think that kind of should help you illustrate now support turning into resistance and resistance turning into support and so on. So now we're going to take a look into this on an actual market. So let's have a look at a market that has been trending recently, and I want to kind of flip reverse this and show you this playing out on the other side. Okay, so in a downtrend. So I've shown you what happens in an uptrend, so I want to show you what's happening in a downtrend. Now the easiest market to kind of do this on recently is DAXI, which is the USD index, and as you may know, at the time of recording, it is now 2021 early Jan. For the last 2 quarters of 2020, we've seen the USD take a hammering. Okay, as you can see, this has now been in a complete downtrend. Now, the first thing to do as traders is actually to identify these regions of support and resistance. So the easiest way to do that is to find a level within the market where the price is rejecting or bouncing or reacting from over and over again. Okay, so straight away I can kind of see that we've got some kind of support over here. Okay, we can see that the price was actually resisting this level for some time, okay, until it broke through. And you can sometimes kind of see this a little bit better on the smaller time frames. Okay, so let me just move into the 15-minute time frame. Okay, we can see another level of support over here. Okay, we can see how many times it kind of bounced from this level until it was broken. Now remember that it's not always going to be absolutely perfect. Sometimes it's going to have to be a zone more than just a horizontal line. Okay, so you can also have your support and resistance levels somewhere like this, for example, because it won't always just be a specific point within the market where the price is rejecting or bouncing from. But I just wanted to kind of show you this playing out over and over again, okay, on a trending market. So let's see if we can just zoom out a little bit more. Let me just move on to a slightly higher time frame so it's a little bit easier. Okay, we can see again, you can see how many times it kind of rejected this level over here. Let me just redefine that over here. Okay, and also we can see a clear level of support over here. Okay, the reason why I'm drawing these on is because you can see the price rejecting from this level, rejecting again, rejecting again, rejecting again, etc. Now, let's apply the same principles that we applied before. Okay, in the uptrending market, now we are in a downtrend. So if you imagine being on the 3rd floor this time and moving yourself down towards the 2nd floor. So this is the ceiling of your 3rd floor. You're bouncing the ball up. Sorry, this is the floor of the 3rd floor. Okay, and you're bouncing yourself up from this level. You're trying to get now down to the 2nd floor. Okay, and the price begins to continually reject. However, similarly as we were showing you on the uptrending market, if you continue to bounce the ball towards the floor, the chances of that floor now breaking and you actually moving down to the 2nd floor is quite high. Okay, so now we break through down onto the 2nd floor. So we're no longer on the 3rd floor, and the floor of the 3rd floor now becomes the ceiling of the 2nd floor. Okay, now the price begins to reject from this level. Okay, it might not reach all the way to the top, but you can see now the support has been created. Now when it crashes through the support, you can see in this instance that the previous support now becomes the resistance. Okay, and again you can see it beginning to support this level again until that level is now broken, and again you see it bounce up, and where does it then begin to reject from? Is this region over here where the previous support was. Okay, you can see then it comes to reach that level and begins to fall again. So this is what happens with trending markets, and this is the easiest way to kind of explain what support and resistance means, and how support can often turn into resistance. And like I said, it's not always going to be absolutely perfect in actual in the markets itself. It's always better explained in kind of theory. However, you can kind of see a perfect example of this actually playing out, where the support is broken and then becomes resistance, etc., etc., especially in trending markets. Now, this is the easiest way to kind of explain it. It can get a little bit more complicated, and that has been saved for our actual silver and gold members, and also the bronze members, and our course members in general. So I can't give away too much, of course, in this beginner's course, but what I'm going to say is it goes into a little bit more detail, and we refer to them as DLs and DH. Okay, so hopefully you found this useful. Enjoy the rest of the course, and we'll see.